Have you ever heard someone say, just invest in ETFs? And you're thinking to yourself, okay, what is an ETF? You are not alone, family. There are millions of people that do not understand what ETFs are. That's why Franklin and I are here. We want to simply break down ETFs, but not only that, we want to be able to show you in regards to why so many long-term investors focus on ETFs. And also we want you to know, does this ETF have a seat in your investment journey? So we want you to grab your notebook and your significant other and let's learn together.
Please like this video, subscribe to our channel. So I'm excited today about this topic about ETFs. You know, that's one of the things that we really enjoy discussing and researching. So exactly what is an ETF?
Yes, a ETF. So ETF, it's the abbreviation. It's abbreviation, but it is a exchange traded fund, and it is a collection of investments, right? That's bundled together that creates this one investment. So if you think about a stock is just, it's one company, right? But if you think about like ETFs, it has hundreds of companies within that ETF. And so I want to break it down this way. So if you go to a warehouse, right? You go to a warehouse and you're looking at one bottle of water, but in reality is in a case, it's 40 bottles of water. That's similar to like ETFs, right? You have hundreds of companies within this ETF. And so the another example I just wanted to share too is if Franklin and myself, we invested, we have $500 to invest in, right? Or 200 or 100, right? And Franklin, he goes and invests into a stock. And that stock alone, the earnings report come out or the news come out, like war is going on, or the CEO leaves the company, right? That stock probably gonna drop. We don't know the percentage, but it could drop 25%, right? That's a big chunk of your portfolio. But if I go and invest $100 or $200 or $500 and I invest in an ETF, if one company drops, I have a whole plethora of companies that are still standing, that's still up, right? So it's not going to make a significant impact on my portfolio. So I really wanted to just break that down so people can understand in regards to like ETFs.
Yeah, that was really good.
Yeah.
So you were able to spread your risk out with ETFs versus just investing in one individual stock.
Right. And too, baby, like especially for beginners, because you're still trying to learn in regards to your risk tolerance, what you can and cannot take to. And so being able to be able to talk about ETFs, because we hear that it's just thrown out there, but people really don't understand what that really means. But for you, honey, why do so many experienced investors choose ETFs instead of buying individual stocks?
That's a great question.
Yeah.
I think just what we talked about earlier, diversification. You know, instead of investing all of your money into one stock or one company or a couple of companies, you can spread your risk among hundreds or even thousands of companies and manage your risk that way. Also, if an investor, often investors want to invest in a specific industry. Say you want to invest in an industry like technology or maybe healthcare or even energy. You can buy that specific ETF and invest in that particular industry without, having to buy just one company in that industry. So you're able to manage and spread your risk around.
Right.
And I would say the second thing is investors like about ETFs, it's the relative low cost compared to mutual funds. The expense ratio is much cheaper for ETFs than for mutual funds. For example, if expense ratio, let me just briefly talk about expense ratio. Expense ratio is what the fund charges for you investing their money in it. And so, for example, if you having a future ETF and the expense ratio is 0.1
Right.
versus a mutual fund that might be 0.5, that's a big difference in expense ratio. So you're able to save almost 4 times as much money and invest 4 times more of your money
Right.
in an ETF versus a traditional mutual fund.
Right. We love saving money, right? And my husband talked about the different industries when it comes to like those ETFs. And so if you are a person that's in healthcare, there's an ETF for that. If you're a person that loves technology, there's an ETF for that. If you're a person that likes following the S&P, right? But the reality is that you do want to diversify, not just put your eggs in one basket too. And the other piece too, I think too, baby, like not being able to study like hundreds and hundreds of stocks. Right, our time is valuable, and so being able to just look at ETFs and understand what that mean. And we're not saying not to invest in stocks, because we love them both. We love ETFs and we love stocks. But on this video, we wanted to just really break down what ETFs is all about too, and how it has helped us as long-term investors and other long-term investors too.
That's a great point, baby. Thank you for sharing.
Oh no, you're welcome, baby.
The question I have for you, the next question is, how can ETFs help couples build wealth over the long term?
Yeah, I would tell you is that one of the advantages of ETFs and being able to invest is the consistency of long-term investing. Like for us, we are long-term investors, right? We're not looking at, okay, hey, the stock is, the ETF is here, the ETF is there. We are consistent investing in the market. And what we mean by that is whenever, let me take a step back. When you are saving, you're setting it up automatically, right? You are removing your emotions out of the way and you are being disciplined in saving. That's the same thing as investing. Investing, we literally have our investing set up. We call it dollar cost average, is where a fixed amount we have a fixed amount, and it's bi-weekly purchasing, buying ETFs, right? The different ETFs that we like and love, right? And stocks as well. And so it removes your emotions out of the way and allows you to continue to keep investing, right? Because the reality is that no one can time the market. And so if you say, oh, I could have waited 2 weeks, I could have waited 2 weeks later to get the ETF, but in reality is you don't know what 2 weeks later is. So the goal is to be able to dollar cost average, DCA, into the market. And so when you hear that term, that is what people are doing. They are buying shares, automatically buying shares twice a week, once a month. Doesn't have to be $500. It could be $100. It could be $50. It could be $25. As long as you keep investing in the market and for long-term growth as well. The other piece too is that Franklin and I, we had an opportunity to create a workbook that really, really breaks down ETFs. It really helps couples understand investing. And it gives you tips and reflection questions and definitions in regards to how to be able to navigate the market. So that's what I would say, baby, because if you don't continue to allow the system to work like dollar cost average you'll stop, you'll come back, you'll stop, right? And the game is to be able to continue to have long-term investing and continue to build wealth for your family.
Thank you for sharing that. That was really great. And I know we have an opportunity to really build long-term wealth together and go along the journey together when it comes to investing into ETFs. And that goes into our next question.
What are some common ETF mistakes beginners should avoid? Ooh, that's good.
That is good. I would say one of the biggest mistakes beginners make is not having their risk tolerance aligned with their ETFs choices. And so, for example, if you're a person that has a low risk tolerance, you don't want to pick a bunch of high risk tolerance ETFs, a bunch of technology ETFs, for example, if you have a very conservative risk tolerance, and vice versa. If you have a high risk tolerance and you want to see big returns, and you don't want to choose a bunch of low risk tolerance ETFs like dividend ETFs. And so I compare it to similar to spicy food. And so I love food. And so I'm going to throw food in our conversation some kind of way. And so, for example, there's a lot of people who like spicy food. And think of spicy food could be the people who have high risk tolerance. They can tolerate, the hot or the spice or the peppers. But then you have the other people on the other end of the spectrum that have a low tolerance for spicy foods. They might be more conservative in their risk tolerance. And so it's important for you to know, not only individually, but as a couple, where do y'all's risk tolerance fall? How much spice do you want to put into your portfolio? How much spice do you want your ETFs to be in your portfolio? And so that is a very important question that you have to answer. And if you make that mistake, you're going to find out, because if you a person with low risk tolerance, having a big drawdown from a high risk tolerance ETF, that could give you heartburn.
Right. I love it. You know what? I know my husband and I, we threw out, how ETFs work and how long-term investors have been able to navigate the market and continue to build wealth for their families as well. But I think too, baby, it's important for us to just throw some out there to them so they can kind of so you can do your own research too. So there's one that's called VOO, and it's VOO, and that follows the S&P. That's Vanguard, like the financial industry institution. That's Vanguard. The other one is SMH. That follows technology, right? And so SMH, so that follows technology. The third one is VTI. That follows the whole entire stock market, right? And then there's another one that I wanted to throw out to everyone, especially for the people that are in healthcare. XLV. So we just wanted to throw some out there to you so you can do your own research, so you can kind of see what they are and how they are performing in the market.
That's good. I'm glad you shared that, so people have a starting point where they can start doing some research, doing their due diligence, reading those prospectus, and be able to make an informed decision. And also, the last thing I would add about, beginners' mistakes is not being patient. It's so important that you're patient when you're investing. It might take more than 3 or 4 months in order for you to get the return that you're expecting. So some people I run into, they say, man, I invested 3 or 4 months and I lost a little bit of money and it doesn't work. Well, it takes longer time than that. You need to have a longer time horizon. Oftentimes when you invest in ETFs, it may take years.
Yeah, it took us a year to
it sure
see
did.
it turn, but that thing turned around.
It sure
did.
It
takes time, but the market rewards patience and consistency. Patience and consistency. That would be the advice that we would give people. Patience and consistency, and learning together. Like it is so powerful when you can learn this thing together and to be able to understand the market, because you will be amazed what you know just by learning one thing new that really can move the dial for your family.
And that's great. And you're able to share as a couple the information that you learn together. And the Bible says iron sharpens iron. And so y'all are along this journey together. Y'all learning together. Y'all vibing together. And so there's a lot of positive things that take place along your financial journey as you're in unity together.
I love it. So family, we pray that our video truly blesses you and your family. And hey, tell us, drop it in the comment below your favorite ETF. But not only that, we also have in the description our stock investing beginners workbook for you. So go out and look at it and be able to learn together.
Please like this video, subscribe to our channel so you can see what's coming next.
Your financial journey is better together.